Hey guys, welcome back to another episode. Today we will talk about the market. Today was wild, you know. Triple Q went up 2.5%, even I think more, 2.72%. I mean almost 3%. Um, so today I want to talk about something very important about trading that many people are not aware of, which is a lot of ETFs like SPY or Triple Q. They go up or down during pre-market. And so if you want to buy a contract and you're trying to profit like 10 times your money, 10x your money, or 12x your money, then you definitely need to read the chart very well and then buy a contract that it's 1 day if you're anticipating a drop or a spike. And so, for example, if we look here at the chart, um, so you see here in on October 29, October 30th at 2 p.m. or let's say at 3 p.m. Um, Triple Q was at $498.04. And so if you want to buy a contract, um, and you want to make a lot of money or, 10 times, 10x your money, then it's better to buy a 1 day if you're anticipating a drop or a spike. And so keep in mind, you already identified a trade, you know what you're doing, and you're anticipating a volatility in the price. And so you definitely want to buy a 1 day, not 0 days, because I mean, it's not like 0 days wouldn't work, but from an experience and looking at the chart, I find that 1 day is more suitable, to for like volatility. Um and so if you bought like puts on October 30th at 3 p.m., let's say 488. And so look here how the price dropped at the market open. Um, Hold on a second. Let's take a look at other chart. And so you see here 486. And so you're talking about, we're talking about $10, $10 difference, in drop. And so obviously your contracts will be up when the market opens. And so this is how you can take advantage of the pre-market, volatility by buying a 1 day contract, not 0 days. You can definitely buy 0 days, but I find the 1 day is better because at the end of the day, and this is what also it's another thing I want to talk about is that when usually there is like a news or something going on with the market, for example, like today, Trump winning the election, usually SPY or Triple Q, they would, for example, like today, for example, the market went up because of Trump winning the election, and he said that he would not put or he would not put a lot of regulation on banks, and so that explains why a lot of bank stocks went up today. And usually, like triple Q or SPY, after a big spike or a big drop, they get stuck, and either they keep going up more a little bit, or they keep going down. Depends on the movement. And so, for example, like here today, like triple Q is at 505.58 cents. And so if you look at you see here, and that's what I'm talking about. This is like we're talking about the second move. And um yesterday, November 5th at 3:30 p.m., the price was $492. And so if you bought a 1 day contract, which is expires on November 6th, okay, Wednesday, November 6th, then by the time of the expiration, like, and now we're talking about 505, so that's like 13.37, $13.37 gain. That's almost 3%. And that will put you, I guess, you will make 15 times your money. Like, I would say 1,500% up on your contracts. And so that's just my analysis about the 1 days. I mean, 0 days you can play it too, but you need to be careful, and you need to check your risk management as well. But the 1 day is definitely super helpful, because usually a lot of drops and spikes happens during the pre-market, or overnight, and in the pre-market. Um, the other thing I want to talk about, guys, is the COT report. So this report is basically shows the COT stands for the commitment of traders. It's basically a report that shows the commercials and retail traders, as you can see here on this website. Uh, the E-mini S&P 500. And so non-commercial is for the retail, commercial is for companies, and then we've got total, and we got non-reportable. And so the non-commercial, it's us, retail traders, right? And so we don't have a lot of influence on the market as much as the companies, they have liquidity, and they have capital. They have so much money that they can drive the market up or down. And so it's important to, check this report every week. They release it on Tuesday, and you can go to this website, tradingster.com, and each week, they release it. I don't think there's for November yet. Um, yeah, I don't think there's for November yet. But from October 29, so that's like last Tuesday, is showing the commercial, they're shorting the market, you know? But keep in mind, that doesn't mean, that gives you an idea. That doesn't mean it's 100%. Please understand this. In the trading world, there is nothing called 100%. I don't care who tells you that, oh, this is 100% guarantee. There's nothing called 100%, guys. And so please do your due diligence and before trading, and pull up the data, look at it, and identify a trade, check your risk management, and then go for it. So for the commercial, as you can see here, the short side is more than the long side. And so we've been noticing, like, the commercial, the companies, they're trading short contracts more. Okay. And so if you look at the open interest, percent of the open interest, and as I said before, as I mentioned earlier, that Open interest stands for the active contracts held by the traders. The traders are, like as we said, non-commercial, retail, commercial, the companies. And so the companies, their the percentage went up 76.3% on the short side versus 68.1% on the long side. And so this is, this is a big, well, I would say a big difference. And so they're probably anticipating something, that would happen later to the market. My analysis, and that's just my opinion, that's not a financial advice. I'm thinking that probably the market will drop since Trump got elected. Uh, the thing is that if he places tariffs on the goods that coming from China, that will increase the cost for the businesses and so forth. They will put it on the consumer, and that equals inflation going up. And so this is why it explains the U.S. 10-year Treasury, as you guys see on the chart, it went up. Now it's 4.4, and then the mortgage interest rates went up too. Let's take a look today. What's the interest rate? Yeah, you see, guys. So right now is at the 30-year mortgage fixed rate is at 6.72%, and so they dropped it like 1%, I think, back to six. But as you can see, it went up. So that means that there's still an inflation, and so the market will, I mean, based if Trump puts tariff, it will drop, because the inflation is still going up. But who knows? We don't really know. That's just a prediction. Um, yeah, thank you guys for watching. Let me know if you guys have any questions or any comments. Please don't forget to like and subscribe to the channel. Thank you.